Hello everyone, welcome to Accounting 312. In this video, we continue with chapter 11 and then we talk about other topics. Before we start talking about the handout, I want to kind of do a quick review again. So chapter 11 talking about relevant information. So the main thing is you have to know what's the meaning of being relevant or being irrelevant. And then all we need to think about in this chapter is our decisions are only based on the relevant information instead of the full information. So basically, the logic of this chapter is you have all the information, right? All the information. And then you separate them based on relevant or irrelevant. And then you have to know the definition of relevant and irrelevant. To be relevant, you have to happen in the future and then also makes difference, right? Then we only look at the relevant information for our decision making. So we talk about those things. We said if we are thinking about visiting your girlfriend or boyfriend next month, let's say, what will be relevant? So maybe the weather will be relevant, right? If the weather is really bad, you may not be able to drive or may not be able to see your boyfriend or girlfriend. So in this situation, the weather condition will be our relevant information. Because if the weather is good, you are going to see your boyfriend, girlfriend. If the weather is bad, then you are not going to see your boyfriend or girlfriend. So the weather will make a difference in the decision of seeing your girlfriend or boyfriend. Similarly, let's say your work schedule, maybe you will be so busy next month, you cannot really have any time to visit your family or girlfriend, boyfriend, then the time schedule will be relevant. And then we also talk about, hey, if a couple is getting married, in China or wherever, that will not be relevant because I said no matter someone is getting married, yes or no, it will not affect your decision of visiting your family or girlfriend, boyfriend, as long as that is not your girlfriend or boyfriend who is getting married, right? So we talk about those things, and then we said that we only think about relevant information. So what we will get by doing something and what we will lose by doing or not doing something, and then we look at if what we will get is better than what we will not get, then we will do it, right? I say, just to think about all the examples we have done. So you have a special order. Let's say you have a special order. So if you take it or you not take it, and then we look at the difference, right? If you take it, you will get a revenue, extra revenue, $10. And then, but you have to spend extra cost, relevant cost. I'm not going to talk about detail, but you just know you have relevant cost $7. So you will get $10, but you have to spend $7. So you are still better by doing it. So the other situation is if you will get $10, but you have to pay $70, let's just make an assumption, then you will lose $60 of doing it. Then we are not doing it. So that's basically what this chapter is talking about. And when we talk about relevant, we only think about relevant revenue. We only think about relevant cost. The cost that will be different between do something and not do something. Some common irrelevant things are like rent. No matter you do the order, yes or no, unavoidable fixed cost or whatever. And then, as I keep telling you, you have to read the question very carefully to decide what is relevant, what is irrelevant. Okay, and then we also talk about opportunity cost, right? So if you want to know more things about opportunity cost, you can go back to the previous video. I believe we still have one more question we didn't talk in last time. I saved it for today. Basically, that's the CPA question. On the handout page 15, multiple choice 19. So we talked about this in the class. I want to mention it one more time. So what this topic is talking about? Oh, if you do something, then you can do some. If you buy something, you can use the facility or whatever to do something else, and then you can generate revenue. And then it doesn't tell us which one we should do. The question basically telling us if you wanted to save an overall saving of 45,000 by, you know, purchasing the things outside, so what will be the relevant cost that can be saved, right? What can be relevant cost? What should be the opportunity cost, basically? I'm not going to really go step by step. I'll just show you my work. So basically, you have make and buy, you have the difference. And then I'm not going to, you know, the direct material, variable direct labor, variable manufacturing overhead, and avoidable fixed manufacturing overhead. Those are the relevant of make. And then you have the purchase cost under buy. And the question said you want to save $45,000 by buying the parts outside. So you want the total saving. You want the cost of buy is 45,000 lower than the total cost of make. So that's the K. We don't know what the opportunity cost has to be. We set it as X. And then if you do the math, you should be able to solve the opportunity cost as 115,000. So why I have this question? The thing is, I told you that, hey, if it's make or buy, and then we look at the difference. So you know, like direct labor, I just say, hey, $30, let's say make. Buy is 0, difference is 30. I also know there is opportunity cost. So if I buy, I can, you know, use the facility, rent it out or whatever. Let's just say, make a number. The really opportunity cost is $4, okay? So, and we know the opportunity cost is under make, and then buy is 0, difference is $4. We also know purchase cost. Under make is 0, under buy, I'm just saying 33, let's say just make that. Okay, so now I want to say the total relevant cost under make is 34, total relevant cost under buy is 33, and we know, hey, then the difference will be $1. So this, you are very comfortable, you know how to do it, and then you know how to get the conclusion. Our conclusion is we should buy because the saving, the operating income will be increased by $1. But what I think you are not comfortable is, I changed the question a little bit. I said, we don't know what is the opportunity cost, but I know your total saving, has to be $1 of buying. So now you don't know what is this, you just know this is 30 plus X, but I know the difference has to be $1, and then your total cost of a make is $1 more than the total cost of a buy. So you should be able to do this, and then you should be able to get the X has to be $4. So what I'm trying to do is, there are so many different ways that you should be ready to be tested. It's easy, always easy to get the final number, but sometimes it takes a little bit of twist. You know, I tell you the final difference, but I let you calculate the middle number. So the same logic, just prepare, you know, practice, and then be comfortable with this kind of question. This is a good CPA question. I suggest you to, you know, practice more. We have another question, I believe. So you should be able to do those things, right? So question multiple choice 15 is very similar. It told you your saving should be 100,000 by buying. So what's the opportunity cost? What the rent has to be? Okay. So those are the things we talked about last time. And then now in this video, I talk about part 4, part 5, and then part 6. So those small things. Part 4, talking about product mix decision with a capacity constraint. So we said, basically in chapter 3, we talk about if we have an unlimited employee or labor or material, we should focus on the product that gives us the highest contribution margin. But now, most likely, you only have a limited resource. Every day, you only have 24 hours, and then you may only have 100 employee or 20 managers or whatever. So our goal is to get the highest contribution margin per limited resource. Okay? So look at this question, said if you make a pencil, each pencil will give you $8, and if you make the notebook, then each notebook will give you $15. From chapter 3, we know we should focus on the notebook, but it takes 5 hours to make one notebook, and then it only takes 2 hours to make the pencil. So then we can find out that for the pencil, every hour you generate $4, right? But for the notebook, yeah, total is 15, but it takes 5 hours. So every hour you only get $3. And then they said the total you only have 120 hours, and then which one you should focus on. We said if you use 120 to make a pencil, each hour gives you $4, so total will give you 480. If you make notebook, 1 hour only gives you $3, then you will only get 360. So we should focus on the pencil because overall your operating income will be increased by $120 over 120 machine hours. Okay, so next one then is easy. We said we should, when we talk about short term, we should focus on the contribution margin per unit of the constraining resource, right? Next one, question 23, is a little bit tricky. They said, oh, you should be able to get contribution margin. This is $8, $7, $10, and then this is $9 per hour, per unit, right? Per unit, 1 unit. And then it told you that per hour you can produce 3 units of A, 4 units of B, 2 units of C, and 3 units of D, and you only have a limited 3,000 machine hour. So this is 1 hour, how many units you can generate. So 1 hour you can generate 3 units of A, and each A gives you $8. So 1 hour you get $24 from A, and then 1 hour you get 28 from B, and then 1 hour you get 20 from C, and then 1 hour you get 27 from D. So we should focus on the product B. So this said, unit produced per hour. That's the reason we time it. But if the question said, hey, it takes 3 hours to get A, it takes 4 hours to get B, it takes 2 hours to get C, and 3 hours to get D, then we should use the 8 divided by 3, 7 divided by 4, 10 divided by 2, and 3 divided by 3, 9 divided by 3. My whole point here is that you have to read the question very carefully. And the next one, 24, is CPA question. Basically, you should be able to get contribution margin under ABC. They are 28, 22, and 28, but we are not done because the customer only has 40,000 to spend. Only have 40,000 to spend. And then this is 1 unit of A, 1 unit of B, 1 unit of C. How many units the customer can buy with the 40,000 budget? To get A, each one, the selling price is $70. Total, the customer have 40,000, each one is 70. So this is how many units a customer can get. And then this is 1 unit, the contribution margin will be. So you do the same thing for B, is that each unit gives $22, and then this is how many units the customer can buy. For the product C, each one gives you $28, and the customer can buy 40,000 divided by $60 for each unit. If you do the math, you should be able to get the answer C. The C product is the one overall will give us the highest contribution margin, over 40,000 of the customer budget. Okay, next topic, we're talking about dropping and then adding customer, and then we basically talking about the depreciation expense. So we talk about that before. We said depreciation expense is always irrelevant for the old machine because that is kind of part of the sunk cost. you got this pencil, let's say, I just say this is the equipment. You got this one 3 years ago, and then you use this pencil to write the record or whatever. So that one is already there. The equipment was purchased 3 years ago. No matter you dropping customer they or not, you cannot go back to 3 years ago and say, hey, you know what, don't buy the equipment, because after 3 years you will drop the customer. You cannot do that. The equipment was already purchased 3 years ago. So the depreciation expense for dropping your customer is always irrelevant. However, if you are saying, hey, next year, I want to add a new customer, and because of the new customer, I have to buy a new phone, right? I have to buy a new phone. So in that situation, the phone depreciation expense will be relevant, because if you don't add a new customer, you don't need to buy the phone next year. You add the customer, you have to buy the phone next year and depreciate. So therefore, the depreciation expense for the new equipment for the new customer will be relevant. So when we talk about adding customer, the depreciation expense will be relevant. Okay, and then so there are 2 different ways. Also, I say you can do traditional 3 columns, or you can just look at the relevant information and decide your answer. So we said, if we drop customer Z, then we can drop or we don't drop. We look at the difference. And you know the revenue relevant, cost of goods sold, handling relevant. We talk about depreciation expense when dropping the customer is irrelevant, because the equipment was already purchased. It will not change no matter you drop or you don't drop the customer. And similarly, we said allocated cost, allocated overhead is always irrelevant. No matter it's allocated fixed rent or allocated CEO's salary, it's always irrelevant. So if we only look at the relevant information, we will find out if you drop the customer, you get 0. But if you keep the customer, actually you can get $65. So therefore, if you drop the customer, you will lose $65. Or what you can do is you just look at the relevant information. If you drop the customer, you will not get revenue from this customer, right? You will lose $100. But you can save $10 as cost of goods sold. You can save $5 as handling. You don't save anything for the depreciation expense because it's irrelevant. You do not save anything for the allocated cost. You save $20 for the marketing. You do not save anything for the allocated cost. So overall, you will lose $100, but you only save $35. You lose $100, you save $35. So your net is losing $65 by dropping this customer. On the other side, if we say, hey, we want to add the similar customer, the only difference now is we have to buy a new equipment for this customer. And then the depreciation expense for the new equipment is $50 per year. So in that situation, you can also do this 3-column analysis. If you add it, you can increase your revenue, but you increase all the relevant costs. You find out if you add it, your operating income will increase by $15. In this case, the depreciation expense for the new equipment will be relevant. Or you can just do this analysis only using the relevant information. You ask yourself, what will be changed for our relevant revenue, for our relevant cost if we add this new customer? If you add a customer, your revenue will increase by 100. Your cost of goods sold, the cost will increase by 10. Handling will increase by 10. You have to buy the new equipment, and then you will have $50 relevant for this customer. And then the allocated cost is irrelevant, but the marketing will be relevant, and then allocated will also another irrelevant. So overall, you will increase your revenue by $100, and you increase your total relevant cost by $85. So you will get $100, but you have to pay extra $85. So your net operating income will be increased by 15 when you add the new customer and then buy a new equipment. Okay, so I said I suggest you to read a textbook about depreciation expense and then on the allocated cost. I'm not going to read it. You can read my handout and then think about why depreciation expense is different for adding and for dropping the customers. Okay, so next question, we have a practice for the CPA question. It said if you discontinue the table line, right? We only look at the table. And then what will happen to our operating income? So we said we can solve the question by having 3 columns. We said either we discontinue or we don't discontinue, and then we look at the difference. The only thing is the unavoidable fixed cost will not be the relevant information. So we do not put that even in the analysis. You will find out if you discontinue, you basically get nothing. You don't earn money, but you don't pay money. If you don't discontinue, you can have 48,000, and then you will have to pay 42,000 as the cost. So if you don't discontinue, your revenue will increase by 48. Your cost will increase by 42. So if you don't discontinue, you can get 6,000. Or you can do it the other way. You ask yourself, what will happen if I discontinue? You will find out if you discontinue, you will lose the revenue 48,000. You save relevant cost by 30 as the variable, and then 12,000 as avoidable. So you lose 48,000. You total save 42,000. So overall, you will lose 6,000 by discontinuing that department. Similarly, for the next question, I told you you are thinking about dropping or continuing with a segment, and that segment will give you contribution margin 35,000, and then you have to pay 30,000 as the avoidable relevant information. We said we don't worry about the unavoidable, just hide it, cross it, or whatever. That will not be even in our consideration. So all we think about is if we drop this segment, we will lose the contribution margin of 35,000, but we can save 30,000 as the cost. We lose 35,000, we save 30,000. So overall, we will still lose 5,000 if we drop the segment. Therefore, we should keep the segment, right? Because if we keep, we get 35,000, we pay 30,000. So if we keep, we can still get 5,000 net. That's the reason the answer is C. Okay, the last topic is talking about the, I think that's the last topic. I'm not going to talk about the problem 11-30. It's a good example. Basically, what I want to show you from this problem is we said allocated cost they are always irrelevant. Allocated cost is always irrelevant, but your actual overhead will be relevant. Your actual overhead is relevant. Your allocated overhead is irrelevant. Okay, so I explained this in class. If you have any question, just ask me, email me, go to my office, and then also I will post my note to the Blackboard. Last topic, talking about keeping or replacing the equipment. So this is also a very common situation. You are thinking about, hey, should I keep my old car or should I, replace it and buy a new car? In this chapter, we are lucky there are only few items that are relevant. We talk about that your old purchase price of your old car is always irrelevant because it happened in the past. Therefore, the accumulated depreciation, book value, or whatever, they are always irrelevant. The disposal value is relevant because if you keep it, you cannot dispose it, you cannot get money. But if you replace it, you can sell your old one and then get $10. And then we also have the annual operating cost. For the new one, the purchase cost will be relevant because if you purchase the new one, you have to pay $100. You don't purchase this new one, you don't need to pay this $100. And then we also look at the relevant annual costs to operate your new equipment. The only thing here is we look at the long term. We look at the long term. We don't look at like the first year, whatever. If you use the older machine, you can use it for 2 years. If you use the new machine, you can also use it for 2 years. So we look at the overall costs in 2 years, and we compare which cost will be lower, under keep old machine or under buy the new machine. So I just show you my work. We did this in class, so I just show you my work. You will find out that we look at the 2 years, and then if we keep, we don't need to buy a new one. If you replace, we have to buy a new one. And then we said every year for the old one is $80 as the operating cost, $30 for the new one as the operating cost. The only thing is, how do we deal with this $10 of disposal of the old one? I said there are 2 ways to think about that. First one is you put is negative under replace. The logic is, think about you buy a new car. The cost is $10,000. But the dealer said, if you trade in your old one, if you buy a new one, you can trade in your old one, right? You can sell us the old one. And then we will pay you $2,000 as the disposal value of your old one. So when you buy the new one, the purchase cost is $10,000. But you can sell your old one to the dealer and get $2,000, kind of as trade-in. So your net purchase cost for the new car will be $8,000. Similarly, think about this situation. To buy the new one, you have to pay $100. But you can also get $10 if you sell your old one and then buy the new one. So this $10 kind of like, the trade-in value of your old one. So your net cost of the new equipment is only $90. Or some students, they say they put $10 here under keep, because they told me this is the opportunity cost of keeping your old machine. Because you only get a $10 when you replace. If you keep the old one, you lose the opportunity of earning that $10. So some students, they put the $10 as the cost under keep. I would say either one works. As long as you think that works, that's fine for me. So if you do the calculation, you should be able to find, hey, over 2 years, total cost under keep is 160, and then total cost under replace is 150. So that's the thing. You may think to buy the new equipment, the initial cost is expensive, but if you look at the long term, you look at the overall, after 5 years, after 6 years, your overall actually the cost will be lower for the new equipment than for the old equipment. That's the reason we think about long term, because long term assets, right? We have to think about long term. Okay, then we have some multiple choice. Question 26 said which one is relevant. It's very clear that the disposal of the old equipment will be the relevant information. And then question 27 talking about what's the total cost saving over 2 years, right? So we said if you buy the new equipment for 1 unit, you can save 5.5 for the labor, you can save 0.95 for the maintenance, and then every year we produce 5,000 units, and then over 2 years we save $6.45 million. But we do not get the equipment for free. We have to pay 5,000 to get the equipment. So our overall saving in 2 years will be 1.45 million. Okay, last one, talking about the same thing. We said you have an old machine, you have a new machine, and then we have to look at it in 5 years, right? We look at 5 years. And then we said purchase cost and replace is relevant. And then disposal will be kind of like trading value for replace. And then we look at 5 years, the operating cost. Then you will find out, hey, total relevant cost under keep in 5 years is 90,000. Under the new one will be 81,000. So although the equipment costs money, later in the long term, you will be paid off, because in 5 years, you can save 9,000. You can save 9,000. And the last one, I'm not going to really talk too much, but basically, it's very similar. The only thing this one is they give you extra information, said, oh, you have to have a one-time cost, you know. If you upgrade, you maybe have to let someone, you know, upgrade it for you or whatever, you have to pay 3,000. If you replace, you may have to deliver, you know, kind of, you have an extra cost of 4.8 million. So basically what question tells you, you just need to put it here. And then we still have the cost over 3 years, we have the disposal old one, and then you will get the relevant cost under upgrade and then under replace. Okay, thank you everyone for staying with me for this heavy, thick chapter. One more time, chapter 11 is really an important chapter, and that is also important for us in our daily life. I hope you at least get a concept of being relevant and then be able to solve the CPA questions, CMA questions. Always ask me for help if you meet any trouble or you are confused with anything. Thank you, and then I'll see you next time.